Hello friends, in our series of discussion on numerical problems of statement of cash flow, this is going to be part 7 of our lectures on statement of cash flow. And basically it's a lecture series on management accounting in which we are having a discussion on statement of cash flow. So in this part 7 of our lectures on statement of cash flow, I thought of coming up with an idea of decision based questions of statement of cash flow, where as a management accountant you are required to give your decision on a specific problem of statement of cash flow, because if we take up statement of cash flow from the perspective of financial accounting, normally the procedure is that you are provided with a question, you attempt it, and you end up with the closing balance of cash, and you feel that your statement of cash flow is prepared. But honestly speaking, the basic purpose or the very purpose of preparing statement of cash flow is not so. It's not merely preparing statement of cash flow and telling you that, see, this is my increase or decrease in cash and I have added opening balance of cash to arrive at closing balance of cash, because that closing balance of cash is already with us from the bank account, or you can say from the cash book. Our objective is to take a decision, to make a decision, to formulate a decision that what is the financial position of our company in terms of the cash position. That book profit is elaborated by financial statement, but what about the cash position? Whether the company is financially or in terms of cash it is sound or not. And secondly, you have to at times give your comments on cash position of the company. So in this entire lecture, I shall actually be focusing upon explaining to you how to attempt a question, and then the way we have to draft our decision. What should be the parameters which we are supposed to keep in our mind while giving a decision on that? Because when you prepare statement of cash flow, you have three categories, that is cash flow from operating activities, investing activities, and financing activities. And in all activities, you have to give your reporting, you have to give your comments activity wise. So activity wise, comments are required, and there we expect from management accountant to categorically report that in terms of operating activity, what is the cash position of the company, whether it is good or bad, where we are doing well and where we are not doing well as a company. That is something which we expect from a management accountant when it comes to a decision based question of statement of cash flow. So keeping this in mind, I have crafted this very lecture so that you should understand how to go ahead with this kind of situation. So let us have a look at a question where there is a person called Mr. Ravi Rao. He set up a materials company in 2018. It's a case study kind of question where you are provided with a problem of Mr. Ravi Rao, who have set up a company, and the company is supplying specialized material to some space research organizations for use in the latest space program. So basically you are dealing with a specialized kind of product where your customer is very much specific, and the company is reporting that we are considering proposals for investment totaling rupees 100 million during 2021. So company is trying to come up with the proposal of increasing or expanding their size of investment to the tune of rupees 100 million during 2021. And the company is hoping to meet the financial need by two ways. Either it is internal cash generation or bank loan, or a combination of the two. So basically they are hoping to have a combination of internal cash generation and bank loans. So whatever is being provided by their cash flow from operating, investing and financing activities, apart from that they can go for taking bank loan also. And the profit and loss account and balance sheet of the company for the duration of April 1, 2019 to 31st March 2020 is reported to us. So as on 31st March 2020, this is their profit and loss account. If you look at their profit and loss account of this Antariksh Materials company, it is providing you the sales to the extent of 2,90,000. The values are in thousand, and gains on sale of plant is rupees 800, which is basically not an operating item. It is coming from the investing activity. Gain on sale of plant. Cost of goods sold is provided to us. Selling and administrative expenses. We have interest expenses. Amortization of patent, it is basically a non-cash item. Profit before income tax, and here you have to mind that income tax payment is given. It's not provision for taxation, it is income tax 42,000, and eventually company is reporting a profit after tax of rupees 57,500. So before I proceed to the question, let me tell you, we can start either from profit after tax or profit before income tax. as I have been suggesting you that we should try to start with the profit before income tax and extraordinary item if it is reported. So we shall be starting with profit before income tax, right? And after that we are provided with the balance sheet of this company for 2 periods, that is 2019 and 2020. If you look at the liability side of the company, they have shareholders fund comprising of equity share capital and their surplus, which is indicated by profit and loss account. The value of profit for both the periods are given, that this is the balance of profit and loss account, and eventually they are reporting total shareholders fund. And under loan funds, they have secured debentures, unsecured loans, and dealing to the total loan fund. After that, they have reported current liabilities, which comprises of creditors and income tax payable. My dear learners, here it is not provision for taxation. It is written that it is income tax payable account, which means whatever is due, for that you have opened an account, and in that it is showing a balance of 4,000 for the current year, and previous year's balance was rupees 5,000. And eventually the total of this liability side have been provided. If we look at the asset side of the balance sheet, it comprises of fixed assets including patent, plant and machinery, and then they have subtracted depreciation out of it. They have fixed assets in terms of net, they have net value, then they are provided with the investment which remains the same, 10,000 and 10,000. Current assets comprises of inventory, debtors, prepaid expenses, cash and cash equivalents, and in this way they have given you a total of current assets and the balance sheet is tallied. So the examiner is basically providing you the profit and loss account and the balance sheet of this company. So all the items are very much known to you, or I can say that you are familiar with all these items because we have already attempted with the numerous questions. So there is no point discussing those items. I shall straight away go ahead with the additional information and then tell you how to deal with this question of statement of cash flow. And mind here, my focus shall increasingly be on the dimension of comments and reporting, that how to write your comment, how to draft your comment, and how to give your decision pertaining to the different activities of statement of cash flow. So that shall actually be my focus point in this very lecture, because already you are accustomed with the way we have to attempt a question of statement of cash flow. Now further, if we look at the adjustments, the question provides that during the period unsecured loans of rupees 2,000 were repaid, which belongs to the repayment of loan category, and under the financing activity we shall actually be showing it as a cash outflow. Question reports that depreciation of rupees 9,000 was included in the cost of goods sold, which means the non-cash item, as non-cash item, depreciation, amount of depreciation is already reported in the question, that is rupees 9,000. Further, there is a sale of plant. It is saying that plant costing rupees 2,000 having an accumulated depreciation of rupees 700, which means the WDV of asset becomes 2,000 minus 700, 1,300, and it was sold for rupees 2,100 for cash consideration. So my dear learners, you are selling a plant which is having a written down value of 1,300 at a price of rupees 2,100. So there is a profit of rupees 800 on this sale, and remember, this is basically under cash consideration, so it would actually be resulting into the cash inflow under which head? Under investing activity. Then question is reporting equity shares of rupees 3,000 were issued during the period for cash consideration. You have issued equity shares, inflow of cash under which activity? Financing activity, because you have issued equity shares. Dividend of rupees 31,275 they were paid, so it shall actually be recorded as cash outflow under the head of financing activity. And then plant costing rupees 19,000 was acquired in exchange for equity shares. So mind here, plant costing rupees 19,000 was acquired, you have purchased a plant, and in terms of payment, you have not paid it in cash, you have issued equity shares. So there is neither cash outflow under the investing activity nor cash inflow under financing activity. So there is no impact of this transaction on statement of cash flow. And investments are in the form of equity shares in a subsidiary. So you have made investment in the form of equity shares in a subsidiary company or subsidiary company. So with this information, what they are expecting from you, this company is asking you to prepare a statement of cash flow for the year ended 31st March 2020, and what is more important is that they are asking you to comment on how much cash was generated internally. what is the position of cash generation, in terms of different activities. That is what they want you to comment upon. And eventually company is asking you, telling you that this company is approaching to you, to your bank, for loan of rupees 60 million. And as a lending officer, assume yourself to be a lending officer in the bank, will you recommend the loan? So this is the question, that if you are assuming the responsibility of a lending officer in a bank, based on this statement of cash flow which you are preparing, would you recommend the loan of rupees 60 million to this company called Antariksh Material Company or not? So the first part is asking you to prepare statement of cash flow and giving your valuable comment, and then the second part is asking you to give your decision, that assume the responsibility of a lending officer, consider yourself as a banker, and then decide whether you shall be giving the loan to this company or not. So with this problem in hand, now I'll be telling you how to go ahead with such kind of problem. First of all, as I have been telling you, start with the working notes. I have opened income tax payable account. Usually whenever we are attempting a question of statement of cash flow, we are provided with the opening and closing balance of the income tax, and along with that the payment value is also given, and we find out the amount taken from profit and loss account as a balancing figure. But here it is not so. Here in this question, the opening balance of income tax payable account is given to be 5,000, closing balance is given to be 4,000, and the question has reported that in the profit and loss account you have deducted, you have taken or apportioned rupees 42,000 on account of income tax payment, which means that the allocation from profit and loss account is already known to us. So unlike previous situations where we were finding the allocation or apportionment from profit and loss account as a balancing figure, here it is not so. It is entirely different here. On the credit side, if we make total of it, it becomes 47,000, and the debit side is having only 4,000. So remaining 43,000 is nothing but the payment of income tax. And here we have written that it is being reported as a balancing figure. So we are finding the payment of income tax as balancing figure. So this can also be a situation. So you should be prepared for such situation also, where there can be a change into the information reported in the question. In place of reporting what is paid as income tax, here the examiner has reported what you have taken from profit and loss account. So we have prepared this income tax payable account, and this payment of income tax, this is going to help us in preparing cash flow from operating activities, in calculating cash flow from operating activities. Now let us start with the statement of cash flow straight away. I have taken net profit before tax and extraordinary item. As I told you, we will not take profit after tax. I have taken profit before tax, and the amount comes to be rupees 99,500. And here comes the adjustment for non-cash, non-operating items, which is debited to profit and loss account. I always suggest my learners that you have to be accustomed to the format of statement of cash flow. Reason is very simple, that in all problems, the information provided by the examiner may be different, but the way you have to prepare statement of cash flow remains the same. So we have to first nullify the impact of non-cash, non-operating items. And if we look at our profit and loss account, the first non-operating item is interest. Interest is basically paid, and it belongs to which activity? It belongs to the financing activity, because we assume that it is paid on some loan which we have raised. So interest payment is basically a non-operating item. So we have to nullify the impact of rupees 2,000 will be added back to the profit, which is reported in the question from profit and loss account. Another is amortization of patent, which is basically an operating item, but it's a non-cash item, because on patent we have already incurred expenses. We are writing off the proportion of patent from our profit and loss account. So amortization of patent to the extent of rupees 1,000 shall also be added back to the profit with which we have started to arrive at cash profit, because this amortization of patent is a non-cash item. Another item is depreciation. As I told you in the adjustment itself, that depreciation amounting to rupees 9,000 was already reported into the question, that this is something which is included into cost of goods sold. So the same 9,000 rupees we have taken as depreciation. Remember, my dear learners, depreciation is here basically an operating item, and it is basically a non-cash item. That is why we are adding. So some students think, sir, you said that we have to nullify the impact of a non-operating item. Yes, I said, but we have to not only nullify the impact of non-operating but also non-cash. So depreciation, regardless of the fact that it belongs to operating category, but this is the truth that it belongs to non-cash category, and since there is no cash involved, so we have to add it back to our profit, with which we have started rupees 9,000. And last one is gain on sale of plant and machinery. If you remember, I told you that WDV of plant and machinery was 1300 and we sold it out at 2100. So gain on sale of plant and machinery comes to be rupees 800. Since it was added to the profit, it increased our cash profit and it doesn't belong to operating category. That is why, to nullify the impact of this profit, we have subtracted 800 rupees from our profit. And in this way, there is a total addition of rupees 12,000 and subtraction of 800 to the net profit before tax of 99,500. After making this adjustment, the value which we get comes to be rupees 1,10,700, and this is nothing but your operating profit before working capital changes. So we have to mind here, my dear learners, that after adding or nullifying the impact of non-cash, non-operating item, what we get operating profit before working capital changes. And this term itself indicates that still you have to work on the working capital changes, which means you have to make changes for current assets and current liabilities, right? So now we shall move on to the operating profit before working capital changes to calculate the operating profit after working capital changes. Now here is the point where we closely observe the changes in current assets and current liabilities. And according to the very respective nature of their change, we either add the value into our operating profit before working capital changes, or we subtract it the same from the operating profit before working capital changes. So what we do, we have added here decrease in prepaid expenses. So decrease in prepaid expenses, why it is added? Cause prepaid expense belongs to the current asset category, and since there is a decline in prepaid expenses, so we have to actually add it back to the profit which we have arrived as operating profit after working capital changes. There is a decrease in creditors. Any decrease in current liability means that you must have made payment to the creditors. There is a decrease in creditors, which means it might have been a payment to the creditor, and this value comes to be 6,000. We have shown this value under bracket, which means it is a cash outflow because there is a decrease in creditors. Increase in inventory, it means you must have made some purchase of inventory, that is why it is also regarded as cash outflow. And lastly, increase in debtors. If you have increase in debtors, then obviously goods must have been sold out, goods must have gone, and that value comes to be 41,425. After taking care of changes in all items of current assets and current liabilities except cash and bank balance. Why except cash and bank balance? Because cash and bank balance we shall be treating at the end of this statement of cash flow. That is why we exclude it at this juncture while computing the operating profit after working capital changes. So after taking up all items or amounts which are to be subtracted and then to be added, we found that rupees 6,900 are to be added to this profit and rupees 1,15,425 is to be subtracted, and eventually this results into the operating profit after working capital changes with an amount of rupees 2,175. So this is my operating profit after working capital changes. And income tax payment we have already calculated from income tax payable account, which was reported to be 43,000, and this results into the net cash used in operating activity to the extent of 40,825. So here it is clearly visible that you have lost cash into your operations. There is no generation of cash into cash flow from operating activities. You have lost 40,825 into your cash flow from operating activities, and this is why the value have been shown under bracket, which means it indicates about cash outflow. There is no generation of cash. And remember, this information is going to help you while writing your comment. When as a bank manager you look at the cash flow from operating activities, you have to find out whether there is generation of cash out of operations or not. and here it is going against this company, because the situation is against the company. It is not favorable for company when it is willing to apply for a huge amount of loan. So we can say that there is no cash generated under operating activity, and cash is lost to the extent of 40,825. Now we shall move on to the next activity, cash flow from investing activities. Under this activity we have only two items. One is the payment of interest, which is regarded as cash outflow. Another is sale of machinery, which is basically your inflow item. So 2,100 you have received and 2,000 you have paid. So there is a net cash generation of rupees 100 only under the head of investing activity, right? So under cash flow from investing activity, we have a cash inflow of, we have cash generation of 100,000, because all the values are in thousand. Now moving on to the last activity, that is cash flow from financing activity. We have number of items under this head. We have issued equity shares in terms of cash, so that is going to be shown as cash inflow. Dividend payment of rupees 31,275 is going to be recorded as cash outflow. Issue of debentures is your cash inflow, of course, and lastly repayment of loan to the extent of 2,000 shall be shown as cash outflow. So after adding and subtracting what we got the cash generation from financing activity with an amount of rupees 18,725. And here comes the point of aggregation, where we try to find out the net increase or decrease in cash and cash equivalents after adding the cash generated and used from all three activities, that is A, B and C. We found that there is a net increase in cash to the extent of rupees 22,000. There is a net decrease of cash of rupees 22,000. So you have lost 22,000 rupees in all three activities. That is why the amount is put in bracket, and you had opening balance of rupees 29,000. So after adding that, you come up with the cash and cash equivalent of rupees 7,000 at the end. So this was the first part of the question, where we have prepared the statement of cash flow. Now coming to the decision part. First of all, when we have to categorically comment on cash position, I would say in terms of operation, company is not doing well. Under investing activity, the cash generation is very nominal, and under financing activity, you have raised some fund. So there is a value of 18,725. So in totality, I would say that you have lost cash. You have not generated cash from this business. So if I have to write a comment in brief, I would say no cash generated internally. Instead, cash is actually used in all three activities. And what is more important? The more important is the cash from operation is negative, and that becomes a point of concern for a bank manager. So as an officer, if I have to give my decision, I would say in the light of all this, as an officer for bank loan sanctioning, I would not recommend the grant of loan to this company. So my dear learners, to conclude, I would say when you are giving your decision as a bank manager whether to sanction loan to this company or not, we have to basically bank upon the cash generation or cash used under operating activity. If your operating activity is generating sufficient amount of cash, then there is no problem. You can recommend the sanction of loan to this company. So with this, I am ending this lecture of mine. I hope you must have understood the way we have to write comment for the decision making, comment for the different cash position under different activities. Along with that, when you have to give a recommendation as a bank manager, how to draft your suggestion or your decision, this is what I tried to explain to you. I hope you must have understood and enjoyed today's lecture of mine. Thank you so much.